Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So gold had a bit of a boost last week, but took a noticeable nosedive yesterday. The calming down of geopolitical tensions has toned down the demand for safe haven assets, and folks are now shifting their focus back to, some old school factors like interest rates and the US dollar performance, which aren't doing gold any favors. Investors are now playing the waiting game, keeping an eye on potential developments in those geopolitical conflicts while gearing up for the US PCE data drop on Friday. As usual, let's take a look at the recent movement of gold against US dollar. Up until last week, it was pretty clear that the bullish momentum was lacking and prices were starting to move sideways. Last Friday, all the chaos in the Middle East kept driving folks to seek refuge in gold, with Israeli missile strikes on Iranian soil pushing gold prices briefly back above 2,400 US dollar. That strong surge that day also marked the fifth consecutive week of gold closing higher, which is the longest uptrend we've seen since January 2023. But as we stepped into this week, gold didn't just keep riding that wave. It actually saw a 2.7% drop yesterday, wiping out the gains from the past week, and now it's trading above 23.30 US dollar. If the buyers manage to, take back control, hitting 2,400 US dollar is going to be a pretty big roadblock before we can see any further upward movement. And if the sellers keep up the pressure, we might find some support around $2,300 instead. As for why the price trend flipped, it's probably got something to do with the geopolitical tension slowly cooling off. Because, after last Friday's missile skirmish, Israel and Iran barely even batted an eye, reducing the chances of things blowing up into something like a full-blown war in the Middle East. With the market's panic settling down, the rush for safe haven assets is not as urgent, and that's something left gold hanging. Meanwhile, everyone's now got their eyes on some more basic factors in the market, like the 2-year US Treasury yield getting close to 5%, the 10-year real yield sitting above 2.2%, and the US dollar keeping steady at 106 for the past week. As everyone starts to relax, the market also realizes that the current interest rate situation, as well as the Fed's conservative stance on rate cuts, are making holding on to gold in the short term feel less appealing. And even though gold's hitting a bit of a plateau or even sliding back a bit, I wouldn't say it's a market where folks are willing to go short as well. Even though it seems like geopolitical tension has simmered down for now, you never know when things might flare back up. And besides, with rate cuts instead of hikes being the Fed's next move, I reckon a little dip in gold prices won't mean much for its long-term upward trend. Plus, with huge central bank purchases as well as the potential safe haven demand getting a boost from the worsening US debt issues thanks to those delayed rate cuts, gold's got some solid support for the climb. So to sum it all up, the bullish energy in gold has been losing steam lately, and prices are entering the phase of consolidation and a bit of retracement. The temporary calm in geopolitical tensions and the strong showings in interest rates and the US dollar are putting some short-term pressure on gold prices, but the long-term bullish trend isn't something we should overlook as well. With the US March PCE data about to hit the scene, things might get a bit wild in the precious metal market this week. Folks are expecting the core PCE inflation to hold steady at 0.3% month over month, with the year-over-year growth dropping from February's 2.8% to 2.6%. If the PCE follows the CPI and shows an uptick, the market might start pricing in the Fed's rate policy more hawkishly, which could send the US dollar up and go down. While on the flip side, if the PCE falls in line with expectations, the least resistance path for gold is highly likely to the north. So that's pretty much for this week. If you have any comments or thoughts about where gold might head next, please feel free to leave in the comment box for an open discussion. Stay tuned with Pepperstone for more insights and updates, and until then, happy trading!